What's going on, guys? Welcome back to day 16 of the mentorship. So today we're going to be going over low resistance liquidity versus high resistance liquidity. So this concept is very simple. Also, if you haven't already, make sure to go and watch the previous videos. You guys need to watch these in order to make the most sense for you. Also, like the video and subscribe to the channel if you haven't already. But like I said, we're going to be going over low and high resistance liquidity, how to kind of use these to even frame trades off of, or just have you guys understand what it is and all the little secret sauce behind it. Okay, so low resistance versus high resistance liquidity. So on a chart, in very simple terms, all low resistance liquidity is just stacked lows or highs that are lower or higher than all the other ones. So let's say you have some sort of accumulation range playing out, and then price starts to just print all this liquidity like this. Okay, now everything that you see along these lines here is your low resistance liquidity. Okay, now everything on the opposite end, all the buy stops or sell stops getting taken, is the high resistance liquidity. So if you look at it from this other perspective here, you could say that this is high resistance liquidity because there's a lot of resistance at these highs. Because why? Buy stops are swept, right? Liquidity sweep, and then we finally got our move lower to then trade towards the drawn liquidity, right? Now let's say that drawn liquidity has been hit, your key level with the SMT, whatever you're looking for that reversal. Then at that point, this low resistance liquidity should get ran through very quickly because there's a lot of stops there for people going short, and it's just a ton of liquidity. So the same concept applies if you're looking to be bearish with it, right? So let's say you have your accumulation here, okay? And then you have all these highs getting placed in, right? Boom, boom. So you have all your low resistance lows here, your high resistance highs here. So what do you wait for? Key level with an SMT to get hit, and then boom, all that low resistance liquidity should get taken out very, very quickly. Let me see if I could find some examples for you guys inside of the chart, just so you can see a good example. Okay, here we go. So here's a good example. Notice how we have all these stacked to highs right here. Boom, this is your low resistance liquidity. What happens here? Okay, if you notice, we have a 15-minute mitigation that we tap into, okay? So we tap a 15-minute mitigation as our key level, and then we also SMT here with ES, okay? Which then shoots us up with a lot of efficiency to take out these highs, and then obviously all the way up to this high. So same concept applies here. See all these lows here, boom. We hit our key level, which was this NWOG and also this fair value gap, and I believe we did have an SMT here as well. And then price immediately with all this very strong push, which was today during the open, took out all that low resistance liquidity. So if you see something like this, and depending on the way you trade, you have an SMT inside of a key level, you could just enter, and most likely it'll end up taking all that out. Especially if this high up here or whatever SMT high is protected, it will usually just take it out without any hesitancy. So it happens almost every day. See, even more low resistance liquidity here that gets taken out, more low resistance liquidity here, and then yeah, there's a whole bunch of low resistance building up right now. So maybe we might have a bearish day tomorrow. We'll see. But that's really all low resistance and high resistance liquidity is. See if I can find some other examples. All this here, boom, all this here is low resistance liquidity. Because look, key level hit, SMT probably somewhere, immediate displacement to take up all these highs, right? It's really simple. It's nothing too complicated. I don't really know what else to speak on in terms of this because I feel like I've covered most of it, but that's the simplicity of low resistance and high resistance liquidity. You really only use the low resistance liquidity to actually frame targets to expect a very efficient move to, which was those low resistance liquidity, highs or lows, okay? But yeah, that's really all I got. I'll leave you boys with that, but if you guys have any questions, any comments, make sure to leave them down in the comments section below. Leave a like on the video, subscribe. Also join the free Discord if you haven't already. It's an awesome server. There's tons of people in there, so make sure to go ahead and join that. And yeah, no trades today, unfortunately, but I will end up seeing what we do tomorrow. Might take a trade, might not. We'll see what happens, but I'll leave you boys with that, and I'll catch you guys tomorrow for day 17. Peace.